All right, so let's try this. We're about to dive into what it has to do with going over structures and stuff in the market at this point. I definitely need to go over structure this week because I feel like the whole of last week I missed the point when it has to do with trading the market and trading structure and all of these different things that were crazy for me to be able to trade the market, not actually focusing on structure and all of that. And this is something that highly I think every trader should be focused on when it comes to the market. The way I was taught to trade structure wasn't like actually the way this is. I break this down in a whole different way by using the line chart. Everybody else that draw that, everybody else that draw like that pattern type thing on the market and stuff like that. Me personally, I don't want to draw that on. I won't be able to actually I won't actually be able to to draw that on. I won't be able to actually draw that on in the way that it makes sense, complete sense to me at this point because it's like I don't know how to explain that, but it's like I definitely want to get into to focusing on trading 100% at this point to make this my um my primary source of income at this point. So definitely when it comes to looking at the market right now, it's like definitely when it comes to looking at the charts right now, it is for me to be able to see and understand what structure is in the market. And there's a bit of video that has to do with structure on YouTube. So basically structure is anything that has to do with the market creating higher lows and lower high at this point. And this is something that the better you get at it, the better you is in the market. But we could let's start from breaking down from this point all the way down to this point over here. We're gonna come from this to here and see how this turned out at this point, right? So we could see the market came from this point down here all the way up here. So this is where we're actually trying to start from. So the market come and this is a big higher. We gotta use this point actually to try to get it correct, right? But this break the higher low point here, and then we basically created a new higher high point on this side, which actually state the fact that the market is headed in the upside. But on the other hand, it is something that I don't know how to explain it. It's something that definitely you have to acknowledge at one point that structure is the key to the market. It doesn't matter what you do at some point, you gotta understand that the structure of the market is something that got always prevail. It got always give you clues in where the market could be or what it could do and stuff like that. So if we look at this right now, we could see that the market actually giving us this right here. We got a lower high point, then we got a lower low, then we got a lower low point here. Then the market, these little lower lows and stuff, at some point they're super matter, but in the long run, it's like you aren't just getting into seeing the market break and retest and stuff like that. And you're not gonna actually, you won't actually see what a market doing in the long run. So the structure of the market is based on these two things. The market creating higher lows and higher highs. So if we got the high here. We could put this here. So this would be like a higher high point. This is a higher high point. Then coming down from there, we created a lower high point. We created a lower high point at this point. So we got a lower high point. Then we come again. We have we got a next lower high point here. Then we created a next lower high point here. Right there was a lower. Wait, this is lower low. I actually put it on the wrong one. This would be LH instead of that. So this is a lower high point at this point. So we got lower high point, then this would be the lower low point. Lower low and lower high point. So this would be considered the lower low and the lower high points, right? So we can just keep these position on the chart. This is lower low, this is lower high. We can move this, then we copy and drop this one here, copy and drop this one here, radius in a little bit. So this is what's up with this one. So we got the lower high and the lower low point. So we got lower high and lower low point at this, right? So this is basically what structure looks like most of the time at this point. You're always creating lower highs and lower lows. So this is considered to be a downtrend at this point, right? So this week I had this whole problem in where I was trading a down, like an uptrend, which were all the way on this, like a downtrend converting itself, going from down to up, basically bulls coming in and taking over. So I missed out on a lot of good trades because I'm not focusing on the structure. So I need to like come and really put myself back on game, because this is something that affected me and made me miss out on good trades and miss out on making good money. So the whole idea based on this is seeing that the market coming from up, going down, creating lower highs and lower lows. So this considered the downtrend at this point. So as long as the market creating a lower high point, which would be this lower high lower than this lower high point, then this is the higher high point, right? So the market just keep coming to the downside and it keep breaking the lower low point and creating new lower low point. So this would be the lower low point at this point, and we just coming downwards, right? So this is something that matched me up crazy like this. This terribly matched me up by not focusing on this whole week to capitalize and make good money, because it's like it's super simple, but at some point it could be confusing, because when you're not paying attention to this is where the problem to come in. If you're not actually focusing on what the market doing when it comes to this, it crazy. So the market shift right here from bearish, this would be the bearish structure in the market. This would be the bearish structure in the market. And as long as you could keep marking these off and taking time and patient, you'll be able to see exactly what happening. So that the bearish structure in the market at that point, the market take it out right here and start giving we bullish structure. And I completely missed this whole point in when this market was shifting, because I was too locked in and too zoomed in, I would say, at some point thinking that the market has to continue to drop. When, if you marking the structure on, if you actually keeping the structure on point, you would know if the market continuing to the downside or not. Because right here, we can see this is a lower low point, right? So the way to actually acknowledge that the market could keep moving to the downside continuously, it's simple. It's just to look at it like every time it break the lower low point and create a lower high point and then re-break the lower low point, that's the continuation for the downside. In other words, it's like for me to continue to look to sell, this lower high point should have never get broken with this higher high point here. So when this break this, I had to immediately switch my mind from looking to sell and start looking to buy. And that was my whole mistake. I keep looking for sells all in here, which wasn't terrible because the market came all the way back down. But in Luna was short term. If I were focused on the bigger picture, you would have seen it. Because the market didn't create a new lower low point at this point, right? We never create a new lower low. In order for us to keep looking to short the market needed to break below this and create a lower high and then go. Well, actually a lower low to consider that it could come back and create a lower high point and then keep dropping to the downside. And that's something that I would say I didn't focus on too much. Like I wasn't really looking at it. So I wasn't marking these off on no time frames. And when you're not using that to mark these stuff off, you'd have missed. Like you'd have missed stuff. So that what I missed, that the market will actually it was switching from a bearish to a bullish structure when it take out this last lower high point here. When it take that out, then this was just a pullback. This was a pullback to create a higher low point. Now this, if we focus on it at this point, we can see that the market created a higher low point right here, no? The market created a higher low point right here. So this was where I needed to actually start to look to go to the other side. because this now created, it now created like, how I could explain that? It didn't create a new low at this point. It created a higher low point because this is the low point here, and then this higher than this down here. So that was a way to trigger my mind to think, okay, the market probably switching from bearish to bullish at this point, right? So I needed to switch from that side to start going the other side. So right here, we have this drop here. We had this drop here. And if I just keep how the trade, which I use my guidelines, which is to keep me with structure to see when structure being shifted or not, I would have seen that the market had already shifted from this bearish continuational move to the downside, which is this one right here. So we switch from this part here, completely going down, taking this out, the last lower high point, and give me this. Right? He never break all the way up like how I like seeing it, but he take it out. He take it out, and then he failed to take out the low point. So that's where I should have activated my mind to know that I have to switch from thinking about going down to going up. It was super easy for me to actually switch at that point, and I didn't because I wasn't super focused on the structure of the market. So if we come right now, let me see if I could take off some of these stuff to try to make this more clear and see, but let me just put this lower low point here. Once the lower low point ain't taken out and we get a higher low point, we should know that the market could actually start to move to the other direction. And this is what we're looking at right here. The market started to shift. The market started to shift here, and I didn't focus on it. This was a higher low point, and then the market came and break this higher high point at this point. So that even tell you even more. We in a higher, we switching from bearish all the way to bullish at this point. And it not nothing else to actually focus on. The market just start shifting. So this was just another channel, like a pullback here, a retracement. And then the market created a higher low point right here. It take out this inside part right here. It created another channel, right? Another pullback retracement here. And then it created a new higher low point. So all of these things, if I were locked in on this and watching this the way I supposed to, and I normally the journal, not journal, but track the movement in the market, it would have been simple to catch this move all the way to the upside. Because it's like, if we could see right there, that's the whole scenario that the market were creating right there. It's like he came and then break structure behind structure here. We break this structure point, then we break this structure point here. We take out this structure point here, and then we take out this structure point here. All indicating that the market got end up going to the upside. And I keep locked in on I was looking for sales. And sometimes when you do zoom out and start to look at the bigger picture, you gonna miss this move. Regardless of what you're trying to do, you'll miss these trades because it wasn't no way that this wasn't visible. It was like this was super visible to see that the market starting to shift from bearish to bullish, and I missed that. And that's something that tear me up because I could have made good money from it and I didn't. So the whole idea behind this week is to try to use to use the guideline a lot more to see what the market doing, where it headed, to stay locked in even more to try to make money from it, because it's like it's something that was super visible, but it is something that if you're not locked in, you're not zooming, you're not analyzing the charts in the right way, it can mess you up a lot of times. So the market came, like I said, it take out this high point by breaking right there. It take out this one right here, and it continued to push to the upside. Then we came all the way up here. The thing about this to acknowledge that the market not gonna go any higher, but because if we look at it like this, we could see that the market right here, it failed to take out this higher high point. This was the highest point in the market at this point right here. So it failed to take that out. So it's telling me that it ranging at one point. So basically right there, we got that right there. So if you look at it right there, we got on the left side, you could see this higher high point right over here. And then on the right side, it tapped nearly, but it didn't take it out. So it ended up dropping all the way back to the downside, retracing basically back down to the downside all the way over here. So that telling me that the market ranging in between, anyway, in between 3,263 all the way up to 3,450. Like the market actually bouncing back and forth from that same direction. So that's the point where I had to like acknowledge that we want consolidation type range, and we could actually use that, sorry, to be able to make some bread from there, some money from that. But I wasn't like looking back at like this is me actually going over all of the mistakes that I made this week in trading, and these are things that I could have done a lot better because it was like all of it obvious at it at this point right now. So if we look at the market right now, we can see that structure wise, it did them pullbacks, it did all of that. We had higher low inside structure, higher low inside structure. We took this point out right here, and then we created a new higher low point, and then we push into the upside. We break structure point here. So if we go, this is the H4. If we drop this down to the H1 time frame, we gonna see that we got structure right there that actually playing out, but it's like we got structure points being created at that point. So we got the higher low point right there. We got the higher low point right there, the higher high, the higher low point here, higher high point, and then the market pushing. So all I needed to do was stay in tune with all of this that going on right here. So the market headed to the upside, and we could just keep the guidelines on this, like keep guidelines on this as much as possible to be able to tell you when the market's switching from something to the next. When the market actually in one uptrend, it kind of like respect the guidelines a lot of time, the trend line, but it not always that it they respect it, and it not always by respecting it, it telling you that it continue into that direction. Because the market could go sideways and still be headed in a bullish structure just by not breaking the last lower high point. So what I get from this, well, like, let me try to erase some of these. I don't want to erase all of them at this point, but let me take off, say, some of these ones. Let me take off some of these so we could have some clarity at this point, right? So if we look at it right there, we could see, okay, market was headed to the upside on the H1 right here, right? So we could see the market take out right here. Boom. Super simple right there. This was like a lower high point in this part. Then it created a higher low point before it take that out up there. So that structure on the inside breaking out to the outside, breaking the resistance level, and then going all the way up. So now we got the higher low point, then we got the higher low point right here. That's just the indication that we should still be looking for buys. Not a reason to look for sell at this point. It's like you should keep looking for buys. Once you have in higher lows and higher high, you should keep looking for buys. Once you have in lower lows and lower high, you should keep looking to sell. So then the market break out this whole piece right here, right? We take this out, so that indicating that we could have an impulsive move to the upside because it break out a larger consolidation point. So we could see right there, break out a larger downward reversal type point right there. And then we get the higher low point right here. And then we got the higher low point right here. So it just indicating that the market and do what it's been doing all the time. Then the market created this whole high up here. Then it dropped and it take out this last lower high point, this last higher low point right here by creating a small lower high point. Then we got on this side, if we move this cross to this side, let me see if I could get this line up with the screen in the best way. So we dropped here and then we created a lower high point, then we created a lower low point, right? So that indicating that the market now switch on the 1 hour time frame, we switch. So going in line with structure, the lower time frame I always switch first. The lower time frame I switch the structure from bearish to bullish a lot faster than the higher time frame. So it switched from bullish to bearish. Now it create a break in the lower low and creating lower high point. This is a lower high point right here, and this is a low point right here. And this trade right here, I was like pissed when I missed this trade right here because I was like, why I didn't take this trade? Like this was super obvious. It was textbook setup. It was super simple, and it was easy to trade because I caught like one buy inside of this. I shouldn't even be worrying about a buy inside of this because this is only a retracement, and this is like one bearish flag. So the market came back, created this bearish flag right to this resistance level, and impulsively dropped and created a new lower low point down here, right? So I don't know why we're looking at this point that I didn't take this trade, but it messed me up psychological part because I was like, this is something that I could have easily capitalized on because I know it was coming, but I just didn't take it for some reason. I only caught this piece here when it break this lower low point and retested it. I sell from there to the downside. Then when I see it fail to create this point and it create a higher low point right here, and this was like one higher high point that break this point on the inside here, and then I took the buy from like right here in the news. The news came out and it impulsively pushed to the upside. So I took that today. Boom. That was a beautiful trade, which ended up giving me, I think, like 4 times my risk or something like that. And I capitalized big on that. That was super nice. But only because only then I was focusing on seeing what a higher time frame was doing. And I managed to catch that. But if we trading with the market, we be good. If we trading against the market, we be bad. Meaning, trading with the structure of the market is the most ideal thing to do at this point. It's like if you could focus as much as you could focus on trading with a market headed, it better. Like it not nothing better than trading. Say if the market headed to the downside by creating lower high and lower low, lower high and lower low, right? Then we got this as a lower, this would be considered a lower high point here, but it only take out this one. And this would be a lower low. The reason I was looking for buy on this was because we were at one major support level. That's the only reason I was looking for buy on this. Because we were like at this major support level right here. And I was like, okay, so we at this major support level here. It would be super ideal to look to say, well, we got 3 touches at the low, at the support point. We should be pushing back to the upside, right? So that was the reason I was looking to do that because we had all the way over here, we had 1 touch, then we had 2 touch here, then we had 3 touch here, and the market rejected. So now I'm expecting the market to go back up to these resistance level on the bigger time frame at this point. So that what the market created, and it pushed all the way up to the bigger time frame. So I was looking to see if I could catch that move, and that's the reason I'm not buying that. I wasn't expecting the market to go that high, but it's like learning how to be able to hold your trades at some point is a key to be able to make big money in this market. So let me now go into that would be like understanding structure of the market on the line chart. I like the line chart for structure of the market because it just more it obvious and the show itself a lot clearer. And if you're on the right time frame, you should be good. So then the market came, and this is where it switched from bearish to bullish. Right here, it take out the last. Right here, it take out the last. It took out the last lower high point, and this become the higher low point. This is the higher low point. This is the lower low point. It failed to break below this to say we continue into the downside, and it started to push to the upside. So that was something that was super nice, and that what we are capitalized on that move. That when I was paying attention. Then it come to looking on the H4. This is where this part become a little bit more obvious on the H4. I wasn't looking for no more sells at this point. I was looking for buys. So the market came here. I took a buy after it break this lower, this higher low point right here. I took a buy right there, and then I took another buy right here, and that still ended up losing a lot of money because I didn't place my stops in the right position, and that messed me up. But if we look at the structure of the market, we could see that the market never went bearish, so it wasn't no reason to sell. I was super bullish on the market and I was buying and buying. We got higher low point here. We got higher low point right here. We could see. Let me move this piece out the way at this point. We move this out the way right now. We could see that this was a higher low, higher high point here. The market had a higher low. Then we had a higher high point right here that was broken to the upside. Before that, we had higher low. We had higher low point. We break this and we got that going up. Now this is kind of acting as a higher low point right here to show we still headed in a bullish structure point, right? So next week coming in the market, it's like the whole idea at this point with this pair would be to look on gold, would be to look for more buys than anything else, because the market's super headed to the upside. There's nothing else that I could see that the chart's doing at this point. It's like I could definitely see that gold would be headed to the upside. It got pushed to the upside next week. I do see it coming down based on the H4 and what previous structure been doing. Based on the H4 and previous structure been doing, we could see that the market was headed here all the way down. We had the lower high points and then we connect these two dots to the lower low point. So we could see right there that the market was headed down at that point, and then it started to shift right here. We shift right here, create that was like a double bottom right there. Then we shift right here. We created this and we push again, and then we just keep switching from bearish to bullish, and we just keep doing the same thing over and over. So the market actually keeps switching from bearish to bullish, and now we all the way up to this point with the market continuing to give us bullish structure. So what we will need this incoming week is just to be able to see. There's a high probability that when gold open right now in the market, it can impulsively push to the upside because it don't have a double bottom on the H4 time frame, and it done rejecting more than once. It got probably more than 3 rejections or 4 rejection on the H1 time frame. So if we look at it like this, we could see that the market actually has it actually have multiple rejection at this point. We got 1, 2, 3 rejections right there. So I definitely feel like when the market open up right now, we should have an impulsive move to the upside to try to reach all the way back to this high up here, like these highs up here. Anyway, up into 3,430 would be like target point right now, because price kind of like looking to head up. So these were like, I needed to go over this whole week or the last past month, not only the whole week, but the last past month, to see what was going on, where I went wrong, and why I actually did a lot of things that I did, because I wasn't understanding why I was losing, and not only losing, I win a lot of trades, but then it was too simple for me to be more profitable. Instead, I take losses that were super unnecessary and didn't make much sense. Like, they didn't make sense at all. You know what I mean? So it's like, it always a better way to be able to capitalize on this by actually doing that rather than trading all over the place. But that's something that I really needed to go over. I needed to go over to be able to make sure that I was on point with that. And that really helped a lot, because just going over that recently was something that made a big difference. Like a whole freaking different at that point. But I definitely feel a lot better with actually doing that, because it showed me that all I have to do is focus on that even more. Marking them off over and over. Marking them off over and over to be able to get to that point to be able to make good profits from that. This week I'll be a lot better, because it's like you can see the structure actually giving us more upside at this point. We can see what it's looking to do at this point, and not only to look to sell at this point. It's like keep looking for buys all the way up to next week. It would be nice to look to buy all the way up to 440, 3,440. I don't know. I think gold might end up going in the next month or two. Probably it might end up pushing all the way up to 3,500 again, which is the all-time high. And that would be something nice to catch. But looking at it, it was like, I don't see how I was missing all of these points, or how I was so locked in on one part of the structure of the market and not focusing on the other side, because it was super obvious to see. It was super obvious to see what was going on. It's like if we look at this point, we could see all of what the market was doing. You know, we could see all of what we're doing, how it was doing it, and all of that. So that was like, I would say that was a lot of mistake points. It could have been done a lot better if I did that like that. But if we move that, you could even see the clarity of the structure and all of that. We could see that the market rejected off of these levels right here, support level, that 3 touches to the low right there, and then we actually like within one range right here. So the market not looking to really trend long term, but it got a big enough H4 and day one that you could use to go to the upside or to continue to have continuation. Then we could see that the market, like right wrong here, this one only like one flag pattern. The market not never take this support out here. This was where I went wrong. I was looking for sells hard. I was like continuing to look for sells when the market not actually continue to give me lower low point. So right here, the market created one another higher low. After creating this higher low point, it break this higher high point. I don't gone over this, but it's just something that helped me be able to see things clearer by repeating it. The market take this out again and then push to the upside all the way. All of this could have been caught. Like all of these moves could have been caught. Then the market pull all the way back, breaking this lower high point here, creating this one here, and this nice rejection right here should have been a beautiful short all the way back into this level of support. Like that was super simple, obvious, and you could see it clear. So that was something that I missed by only not focusing and locking in on what the market was currently doing. So we had that, then we had this down here. We created this support level here, created a higher low point right here, breaking this lower high, then taking out this lower high, then taking out this lower high. So then we had all these creation for the higher low point right here. We created support with a higher low point right there. We break and retest support and resistance there, and then we keep pushing to the upside. So now next week it could be super obvious to look for more buys than it is to actually be looking for sells, because it's way more clearer than it was before. It's way more clearer than it was before at this point. But it just definitely, I would say, the thing to try to keep it as simple as possible, but to try to focus on structure as much as possible. Structure and support and resistance would be super simple to be able to make it to make super easy profits and make money from it, because the whole reason actually catching this would have been to stay focused on the structure of the market more than anything. It was like, if you could stay focused on the structure of the market, it would be a lot easier for you to capitalize from it. And I didn't do that. I did it at the last ending, which was like wrong in this part here. I started focusing on it here and a little bit down here when I started to see the support level. But it's like, that was something that I should have done a lot better, to be honest. Like a lot better, because it just what obviously did for me to see it. And I don't want to use the 12 hour this week. I want to focus on the daily. The daily and the 12 hour kind of like, they're kind of the same thing. It really not no difference in having all of them on. We can see that the market that kind of create the same shit. So we had that and that, but if I were more focused on like that, like we could see that right that this is the daily time frame, right? So we could see that definitely we ranging sideways. We not trending to say long term like how we were doing coming from down below here. It's like we could see that from down here, gold been bullish, bullish, pushing up, pushing up, pushing up, and that been happening for months and months. We could see that look. Like the market been coming up, coming up. So right now we like you want resting spot, but we consolidating for a bit. We going sideways, but in between that sideways market, the market's still giving us some good moves to the upside and to the downside. At least to make some profits during each trading session. It's still moving in a nice way. So when we look at it like that, I don't mark that off. You could see me one range, and this range have, let's see, this got 1,600 pip move in between this, right? So that's a lot. That's 1,600 pips right there to stay on point. So we got 1,600 pips right there. All I would need to do this week is to lock in as much as possible and know that I trading in between gold moving in between 3440 and I would say 3440 and 3280, like gold moving bouncing in between them two price range. So anyhow the market pull to say come to the upside, anyhow the market pull to the upside, it would definitely be to look to see if you can break that. And if the market doesn't break that, then we could look for short. It's like if the market doesn't break 3240, we could definitely be looking for shorts at that point because it could come all the way back down to 3280, somewhere around there, probably even lower. But it just to trade what you see and not what you think as much as possible because the market just the repeat itself. The thing about the market is how much patience you could have to wait for the setup to come around. And that's something that mashed me up a lot because before when I used to trade the market, I'm not a patient person like normal, right? I'm not super patient. So I had to learn patience to be able to trade the market any way you put it. So now that I trade in the market in this way, it's like I'm way more patient than I used to be before. And I know that with time, it could get way better, that I could capitalize even more and more. But you could see how the market just literally be taking out structure points over and over. So it's like once we have in lower high points and lower low points, we good. You could keep selling every time the market pull back and say it doesn't take out the last lower high point and it giving you something nice with the downside, you could keep going. And that way I mess up on this side. I was seeing that the market were coming from up here, coming down, and I wanted to keep selling, but the market had already take out this and it pulled back like this. So this was the chance to actually come and acknowledge that the market didn't break this lower low point and it actually created a higher low point here. And then it break the higher high point here. So this were all buying opportunity right here, buying opportunity, buying opportunity. And we could see that the market was doing that continuously. So the market did that and then it just keep going to the upside. So it was super easy to try to look for that as much as possible. If you were looking for something in a longer run, like not just looking for a simple grab and go, but something to swing. And this same thing that happened in here is the same thing that happened on the 15 minute. It that happened on the 30 minute is the same shit that just repeating itself continuously, right? So this is the way you would capitalize on it as much as possible. This week, I want to capitalize on by trading this because we can see that the market here, after having them move to the downside and stuff like that, it had like the inside structure point here. Then we had the higher high point here, then the higher low point right here, then the higher high point right here, then the higher low point right here, and then it keep breaking and going to the upside. So all of this here were opportunity to try to buy the market on this structure point. And when it break this, it was like an indication that they're going a little bit higher. And once it take this out, well, you don't know. You have an indication that you have an even a bigger push to the upside. So then what we had another higher, we had another retracement here. We had the double top. One time before, I thought that having a double top was like a whole reversal point. The double top in the market is a good place to take short, and the double bottom in the bearish market is a good place to take longs because the market that kind of like rejects off for it for a little bit and stuff like that. But the thing with it is you have to constantly acknowledge that the double top still just a higher high point. It not like, okay, this is one double top in the market and reverse. That shit to work like that. And then it created one double bottom and it pushed to the upside. So if the market headed to the upside in a bullish structure, it's easier for you to actually buy that double bottom than to sell that double top, because selling that double top gonna be temporary. Buying that double bottom in a bullish market is a lot better. And if you could catch the double bottom in the Asian session, it's like you made, because catching double bottoms in Asian session, say in a bullish market, is like it not guaranteed profit, but it definitely the payoff. Like it could give you something. So catching double bottoms in a bullish market could give you something, and it got affect in some ways that you can make some profit. So I did that several times this week, and it came out profitable. Catching a double top in a bearish market is something that pays off a lot of times. So at this point, it's like acknowledging where and when you should be able to try to catch these moves, because Asian session before were like my least favorite session to trade the market, for the simple fact that the market used to move slow. But right now, for some reason, the market moving a lot more impulsive when it comes to the Asian session, and it result into better movement and better price action. It not moving like it was before. It not doing the same shit that was doing like say a year ago or something like that. If we come and we put on this, we could see like all of these is with Asia, New York, and London session that open. So if we look at it right here, we could see that basically the if we look at it right now, ever the white box would be known as like the Tokyo, the red box would be London, and the black box would be New York, right? So every white box, you gotta see that the market got kind of like either create either one, either reject from a resistance level, or it that kind of like reject from a support level, whether it bullish or bearish, right? So that's something that happen in Asia all the time. In the biggest move got always happen in London and New York every single time. Like right now, if we focus on what been going on right now, you could see that most of the biggest move happening in the red and the black box, 90% rate in the red and the black box, like all the time. The red and the black box all the time. So like if you could catch anything in between the red and the black box, you could. If we come and we could go back and look at it, we could see red and black box. Red and black box. It's like Asia to give you Asia to actually create the setup, and London to play it out, and New York to continue it, or it to reverse it at some point. But it'd be like that continuous same thing happening over and over. Asia could kind of like create the setup, London and push the setup, and then New York could continue it or reverse it. And it's like this what been happening. This what been happening lately on. This is what been happening lately on gold. Like it creates the same repetition over and over. So let me move this shit off. If we focus on this, been helping me a lot, because I've been noticing that. Okay, so if we UTC time, which would be 7:30, that 8 hours back, that's something wrong. I don't know. I would say after 12 a.m. or something like that. I would have to like calculate that UTC time is like 8 hours in difference in my time. So you could see that what happened there, and like the market actually pushed to the upside. Red box again, big move with the black box. This was like the white box started it, red box continue it, and the black box kind of like the same thing. But most of the time in the red and the black boxes, we'll be having the most biggest move. The red box, and the freaking the black box. So this is what been happening lately. All of the moves have been coming in London and New York. London and New York, London and New York. Yeah. So this week we could have the same expectation to try to see what gonna happen in London and New York, because if we look at it and see it, it's like most of the moves have been happening continuously in London and New York at this point, and it's super nice to be able to have that because you could catch these set up, put pending orders. Looking at this is like I don't see that I will have to go back to what I was doing before, which is using a lot of pending orders to be able, hi me, to catch a lot of these pending orders to be able to catch these moves, because the market been pushing most of the time in London session. All of the big freaking moves been happening in London session, to be honest. So right now, it all about setting this up with pending orders over and over. Like right now, when this come, all I do is set one pending order here at the support level, one pending order, something about here at this level, and easily look to try to catch this move up here. It's like I remember I made like I think it was like $2,000 trading with pending orders. One time when I was working super hard, I just used to use pending orders, and like in Asia and go sleep and wake up and boom, I'm profits, or boom, I wake up and I'm in a loss. And at the end of the time, it's like I end up making like $2,000 just by doing that. So at this point, I will have to definitely drop into to doing that, because staying up for 4 a.m. in the morning not super beneficial at this point, because you get tired sleeping and you gotta wake up early sometimes, and it doesn't help. So definitely I could see, definitely going over this was super helpful for me today to see where my errors are coming from. But if we look at it and over, it's like the market continuously moving in the most of the time in the red box, most of the time in the red box, the red, red and black box. So 7:30, I would say like 7:30 to 8 o'clock, 7:30 to 8 o'clock UTC time. That's when the market to move. 7:30 to 8 o'clock UTC times it making these big moves. So what we would need to do is like focus on those times to be able to catch these moves. It's good to the Asia session to set the move up. Sometimes you have good move in Asia, not always. Asia session kind of like set the moves up. New York session and London session to push it, and you know have good movement from that. If we could come all the way back here and see like all of what been happening, it's like if you look at it, it's the same thing repeating itself. I'd just have to stare at the market sometime to see how far I come from doing this and understanding it without much help and stuff like that. But it would have been a lot more fun if you have somebody to teach you the game rather than creating mistake continuously to learn the game, you know. But this the year to be able to go hard at it and make some good profits from it. Done it before, so I just gotta find my way to lock back in and start focusing on other things because it's not resulting in what I wanted to. So this is just beautiful structure in the market, bro, to see how you could use the line chart at close price to see when the market's switching and when it continuing to go from one side to the other side and stuff like that. It's like it just repeats itself over and over. So it's just about how we could repeat itself continuously with it over and over. Right here we could see we had this before. Then we shifted from that to shifted into this point here. But like marking these off is what like my go to. Like I always used to mark these off and I just stopped doing it. And sometimes when you start doing something that you're so used to doing that been helping you so much, it just started to mess with you at some point. But like getting good at marking this off as much as possible again to start to see when price started to change, when price started to what name. I only to use the guidelines and support and resistance as much as possible. It helps a lot to be able to see what the market doing when it doing it, when the market shifting from one thing. The thing about using these guidelines is to always use the last two dots, like the not the last two dots, but the last two higher low points or the last three marks. Like I would say, if you could stay in line with at least the last three higher low points, then you should be good. Do extend it to more in the past, like more in the future. So it's like the last two or last three higher low points, the result in way better outcome than using all of the other ones. Them like see right here, you could see they're the last three dots, and then the last three bearish connect them three, and then you could see exactly when the market starting to shift. If it could continue to drop, I only to use them to tell me when structure shifting or not. Align them together, and then you could start to see like, okay, well, we just break this level here, we just take this level out. Okay, now we just see we take this level out here as well. You understand? And we came and we rejected this third piece up here. So it's like the market did that, then it shifted back. So what you would do now is you would come and actually place it on these 3 points right here. These three here. This one here, he irrelevant at this point. Place it on this side now to see when the market shifted from this side now to going bearish. So now that way you'll end up finding your next trade. So right here, this would have been the next trade at this point, and you're looking to sell it here. So that one bearish pattern, one bearish structural pattern at that point, then it shifted and it came and it retested here and it dropped. So that was super nice to see how it came back and respected this level. But it's like it came at this point, it dropped all the way down. This really not something I would be marking off. You could, but it's not necessary. It's not good enough structure. But then when you come and you mark these 2 points off, you could see, okay, it's starting to form a bearish flag again. We got these two higher. This is the three last higher high points. This is the two last higher low points here. And it kind of like on the inside of that, it break out of like these higher low points here. So we break out of these higher low points here. Wait, we're going up, and then we had these higher high points right here. So that was like kind of like structural pattern inside a structural pattern. And the market started to drop to the downside in New York. It created this big high up here, retesting this level of resistance here. This level of resistance here, retested that, and then it come back down, then it created this, and then it dropped to the downside. If we look at it on the chart pattern, we could see what it looked like. So that what it looked like at that point. It just pushed to the upside, retested that, but right now I'm really focusing on the structure, not the candlesticks. The market did that. Then what we did on this side was break this last lower high point here, and then started to drop to the downside. Then we take out this last lower high point right here, and immediately tanked to the downside. It was like a big bearish push after that. So when we done do that, I'd come and look at, like, let me switch it back again. We could see here, if we put it on this now, we could go with these here. We push to the downside, we start creating lower low points right here. So that was that low point. So we start creating lower low points right there. I would mark, like, you mark this piece off to know if the market breaks below that, you'll continue to look to sell. But if the market break below the last lower high point, you'll look for buy. And this is my old time way in trading, and I don't know why I really stopped using it. But it used to result to me to be able to see the switches in the market most of the time over and over. So you could see that right there. Then you could see the next shift right here. When it break this, it created support and resistance right there. And then it pushed to the upside. If we switch it on the other side, you can see the exact point weight we're using to be able to catch that. So the market did that and pushed to the other side, right? And then it pushed up. Now if we come and we look at the market on this part, we could see this is the section that the market took out this lower high point here, this would be the time frame above which would be the H4. So what we did here, after taking that out, we take out the next higher high point here, and then we push to the upside, and we created, just like what we did down below there, we created one double top. We start creating higher low point. Then this is where you would actually come put your guidelines on to see when it got shift structure, by marking off the last two or last three higher low points, and marking off these ones to see, well, okay, this way we're going up, this way we're kind of like going to the upside. We created that up there, then it come and it take out this part right here. It took out this part here, then this is the next point where you would come create these 3 points, and you would see this is another type pattern. This is another pattern here, but you just want to know which is which, and you can see that the market started to push to the downside by breaking this lower high point right here. We break this lower high point here. We created one lower low point here. We got one lower high point here, and we got a lower high point here. And then the market just came, retest that, boom, boom, and then drop all the way back down, taking out this last lower high point here, creating another double top, taking out this lower high point here, and then creating this lower low point. But it never came and take out this part down here. So that indicating that the market maintaining its bullish structure at this point. So then what normally I used to do is just come and mark these one off, right? The last two lower high point on the bigger structure, this would be on the H4 time frame, and marking off the last 3 lower low point on this time frame. And if it doesn't match up good, it doesn't matter, but you could put it with the last 2. So that with the last 2 lower low point to see the market moving to the downside. They just used as guidelines and nothing else that you could actually use those for. And then the market came on the inside of that, created this point right here. This would have been like the last lower high point right here. Then it break this right here. It close about that point. Then it close about this point, right? Close about this point, and then the market started to push, started to switch all the way back into bullish structure. Then it started to create that. It's not gonna be always that you could mark that off, but you gotta be able to see when you could do it and when you can do it. Then we have this level here that the market was testing, and then it started to push to the other side. So then we took out this level, the structure here, and then we push. Then this is where you would actually, okay, you analyzing, keep your guidelines on as much as possible to see when the market gets shift from one side to the other side. You understand? This would be like the structure. This got the low, the higher low, the higher low, and the higher low is shifted right here. You could catch a small sell. And then what made it even what name? It failed to create a new higher high point right here. Then it break below this higher low right here, and then it started to drop. Then we break again below this one here. Then we created a lower high point here, and then we created a lower low point here, then a lower high point here, and a lower low point here. Now you put this on guideline again, drop this down to the last 2 or 3 lower high points to see when the market actually started to shift. These are the last 3 lower high points right there. We shifted. These are the last 2 lower low points right here. You want to put these on to see, okay, if we create a new lower low point or we create a new higher low point. The market failed to create a new lower low point. The market shifted from the creating lower low to creating higher low points right here. It come this low. If we look at it, this higher low down here, then it failed to come back down, and then it created a new higher low point up here, and then it come back, created a next higher low point here, it break, created a next higher low point here, break resistance, and just creating higher low points. So this is something that help a lot when it comes to plotting to see where the market got head in the next couple of hours, in the next couple of days, or some shit like that. But it's like we had this push right there. We had that push right there, and then we pushed to the upside. So definitely it would have been super nice to be able to catch that move, but it shifted again. It break this level of structure point, this on the H1. Yep, H1. It break this, and then it started create lower high point. So it just started to drop. So it easy and simple to see. This is where sometimes it used to be tricky to me, but now I understand the whole point in it. It's like it break. If we put this cross here, we would see that it break right here, the trend line, right? It break the trend line or the guideline, but it didn't break the structure point, which would be this. You understand? It didn't break the last lower high point, and it create this, but then it create a new one all the way down here. So if you had this here and it were creating that to the downside, you would want to move that from there, put it at this point, and catch the next last one. It just guiding you to know where you are. So now you want to let this one go, grab this one, and grab this one here to see exactly if we can come, reject, create a new lower high point, or what we can do. It's just a guideline to see what the market doing with structure and stuff like that. This is the last two lower high points and stuff like that. That's it, and no nothing else for that. The market just come and spike all the way to the upside. But super simple to see when the market creating patterns and stuff like that. Right now, all the way on this side, we can see that price moving to the upside, right? So the only reason you would look for a short position at this point is to say, well, the market came and break and then started like create structure, come in for this side and stuff like that. This will be where you would be looking to sell. But once the market creating higher low points, it's like to keep in that direction as much as possible. We got higher low, higher low, higher low, higher low, and then we got right now. I'm not looking for one switch, so I wouldn't be looking to draw like this up here because I'm not looking for a reversal. Only time I want to put that on is when the market done start to like break support level. Like say the market come and take out this support level, okay, then I could be able like, okay, let me see what it did previously, which was up here. It come and create higher low. It didn't create no more higher low points. You can mark that off. We indicating that we starting to shift. The market could start to push to the downside to support. We trying to go down at this point. It's like it's to have if to have one way in trading the market over and over, because it's like consistency is key based on this. If you could trade it one same way over and over, but evolve with time to try to understand what's up with it, that would be super good. So that's something that I need to focus on as much as possible right now in this week, because last week was super good, but this week could be a lot better if I could just lock in even 10 times more when it comes to lock in 10 times more when it comes to analyzing the structure of the market. When it comes to analyzing the structure of the market, seeing what pricing, seeing being more patient is like a key point to me. It's a key point to me to be able to understand that. Like being patient is a key, bro, because this week I feel like I was super impatient when it comes to trading the chart. I got into a lot of early trades that were unnecessary that could have been avoided and left behind. And this is so dope. Like seeing how the market just like create these stuff over and over. It not I would say not nothing much to expect, but it for it to repeat the same thing continuously. But again, I kind of like done got over at this point, so I need to like take a break, get something to drink or something. But I won't go over this again tomorrow. Continuous repetition is something that help you get better at everything that you do. So my guy, US 30. I love trading US 30 for some reason, but right now I just focusing on gold as much as possible. Um, Focusing on gold as much as possible rather than US 30. But US 30 to move super nice at some point and it profitable, but you could be profitable by trading any pair that suits you. So I like gold a lot more. So I'll focus on it and see if I could gain all of what I need. I get more and more used to it with time. More used to it, more used to it. And at this point it's something that would be super nice to master. So I master this at this point, make some good profits. But beside that, we out, Brent. On that note, so ready to pull out. Come back at it later tomorrow. But that was super helpful to review all of my mistakes and stuff and try to get better at it. But understanding that the psychology is the part that most are being affected by actually not not focusing on how patient you could be and how you're supposed to be patient and how you gotta be able to manage these things is super important. So I gotta tap into that more and more, like the psychology. But beside that,